In this next example, we're going to go over what is the maximum price movement and how to set up our day or analyze the market before we start trading during the US session. We want you to take a look at this chart. On the left hand side you can see we have a Euro USD 5-minute chart. Now we have a couple of reference points here that we're going to go over as we give you the example. First, what is the maximum price movement? We've noticed over the last couple of years, a currency pair like the Euro USD can reach a maximum level anywhere between 200 and 220 pips. So you might want to write this down. Once again, we've noticed that the Euro USD can reach a maximum price movement in a 24-hour period anywhere from 200 to 220 pips within 24 hours. Now, how do we know this? Or where are our reference points, you might be asking yourself. Very simple. First, let's take the example as if we were trading during the US session. We get up at 7 o'clock in the morning. We look at the market. Here at the end of the chart, you can see this is 7 in the morning. And we can look at the price movement to see what happened during the previous sessions. Now, what is important is to keep in mind when is the open and the close of a new session. The market normally closes at 5 p.m. New York time. So you can see this red line that we've placed here is at 1700 hours, which is equivalent to 5 p.m. We're going to take the reference point and we're going to mark it, and we're going to take the price for the start of the new session, which is 134.55. We would consider this the open price, and we're going to use it as a reference point. It doesn't mean anything else. Once again, it's just a reference point. Now from this point, we don't need the information to the left. All we are concerned with is the information to the right of this price. So we can see that at about 1900 hours, the price moved lower to 134.45. And at the highest level, which is approximately 6 to 6:30 in the morning, almost to where it is now at 7 a.m., the highest level was 136.00. Now why is this important? It's quite simple. Because I'm starting a new session and it's 7 o'clock in the morning, I have no idea what's about to happen or what's in store, what the trend will be for this new session. So I want to try to limit my risk or my exposure in the market. So what am I going to look at? I'm going to look at the previous sessions to see how much the price has moved, and this is the key, does this currency have any more room to continue moving higher? Let's take the example that we're giving you. The lowest price is 134.45. The highest price is 136.00. In case the numbers get complicated, simply use a calculator and subtract. For example, here we have 1.3600 minus 1.3445, and you have 155 pips. So that is how much the price has moved overnight while we were sleeping. Now how many pips do we have left? Well, if we set at the maximum price movement 200 to 220 pips, that means we do still have a little bit of room for the euro to continue moving higher. Is it really worth it to place buy orders? Number one, it's important to view the methodology video. In the methodology video, you will see that we've said we must give the market time to develop when we start a new session. That means that in the next hour and a half to 2 hours, if we see that the price is moving from 136.00 higher, we still have to give it time to confirm if this trend is going to keep moving up or not. So even if we give it the next 30, 40, 50 pips of price movement moving up, that's going to give us with very little room where the currency could move higher because we're reaching the maximum price movement of 200 pips. So in this case, this is a day where we have to hope that the price starts moving down and we have a downtrend for the US session, because we have a great deal of room to place sell orders, but we don't have a lot of room to place buy orders. This is the reason why we must analyze the market and look at the previous sessions. We would like to confirm to see if we have room for this currency to continue moving in the direction that it was during the previous sessions in order for us to place trades in that same direction, Or if we don't have room and therefore we should be patient, now you can use a 5-minute chart, a 10-minute chart, or a 15-minute chart. It doesn't really matter as long as the chart that you're using gives you enough room, as you can see, for us to go back. And we're using a 5-minute chart here, but it gave us enough information to be able to go back to 1700 hours the previous day. This chart actually gave us too much information, more than we needed, and this can sometimes confuse you. That's the reason why we suggest that clients use smaller time frames. It's how you interpret the information that's in front of you. If you have an hourly chart, you're going to go back days and weeks previous to the sessions that you're trading right now. So that information might not help you, but then again, we have different traders that have different methodologies and different ways to interpret this information. This is what we normally use. We like to use shorter time frames to compress the information and give us more of a visual. Bigger time frames restrict us from seeing the in-between, and they just give us the facts. We want to be able to see the in-between. We want to be able to see these small little movements that happen during the night, so we know where the retracements are, at what periods did the price actually move up, instead of just seeing one big candle, for example here, that would be red, showing us that the trend went down. When we have smaller time frames, it breaks it up and we have a lot more information. So once again, choose a correct time frame. We would say something between 10-15 minutes is more than enough, especially when you're trading the US session. Once again, if you have any questions, please feel free to contact your account manager. Good luck viewing the next videos.